We spoke about technical indicators, which will help you analyze effectively. What are those technical indicators? That is your MACD for convergence and divergence. And then that's the moving average. So MACD stands for moving average for convergence and divergence. You have the relative strength index, which is the RSI. And then you have the stochastic. You have the stochastic. And then you have your moving average, MA. Then you have your BB, which is Bollinger Band. And that is most that we're using. And then sometimes we use the parabolic SAR. I'll explain where we use the parabolic SAR. Right, so the PSAR, that's the parabolic SAR, right? And then once you got your technical indicators, now we go to pure market movements. We're looking at support and resistance. We're looking for support and resistance. No? We're looking for support and resistance. Forgive me for beautiful typing skills. We're looking for support and resistance. And this is not resistance, that's a resistance. And then we're looking also for market formations, right? We're looking also for market formations. And then under market formations, right, we have your heads and shoulders, HNS. We have your double top, which is DT. We have your double bottom, which is DB. And then you have your triangles. You have your wedges, rising and falling wedges. Then you also have your pennants. These are your market formations. Then you have your other market formations, which we call harmonic patterns. Harmonic patterns. One last thing, when after you've analyzed and everything, what is important? It's your forex psychology. Forex psychology, which in our course under forex psychology we have trade management, then we have risk management, and then also we have account management. We have risk management, trade management, and account management. So once you've mastered all of these, like trading shouldn't be difficult for you. To tell you guys the truth, trading shouldn't be difficult for you. One last thing that I can throw in here is that, remember, you need to understand fundamentals. You need to understand fundamentals, right? These are your market news, which influence any pair which is directly correlated. So you need to understand these ones. So quickly, you have your heads and shoulders, which is your HNS. Your market moves in a bullish direction, and then there gets to be a retracement, and then a continuation. Therefore, another retracement back to the base, and then now a continuation. Therefore, then you have a major retracement to the upside. This is your left shoulder. we have your left shoulder here, your LS. Then you have your right shoulder over there, which is your, oh, sorry, your RS. And then you have your head abbreviated by H, by the letter H. As you can see, I'm not doing in depth of it, but I'm just showing you. So the market moves in a bullish direction from the lower low all the way. The market will be moving, forming from the support, forming lower highs all the way. From on the upside you have the highs, and then on the downside you have the lower highs, and then there gets to be a retracement. Most of the time this retracement here, right, the retracement there is the 618 retracement, of which this base here, if I were to highlight it, let me call it base A, which it's the end of your retracement, should most of the time it's equals to that base over there, right? The reason why I didn't draw it in an equilateral state is because sometimes it can just be flipped around, not straightforward, right? So you will need to understand it. This base most of the time is the same, meaning here on the upside here, your Fibonacci, not retracement, your Fibonacci extension here, the left shoulder is formed, right? It's formed through extension. The extension is to 100 level. Right? That is your right shoulder. And then now, this then starts what we call an ABCD pattern, or an ABC pattern, of which your base is now A. Then your left shoulder, your right shoulder here, it's B. Then your point there, it's C. Right? That's your extension as well. C is formed as a result of an extension, Fibo extension, which is 1618. Right? That is C. Then you will have a pullback from point C to the 618, which forms the D point. D point, which is the 618 retracement. This is just a rough sketch of it, right? Then just here by the base here, I'm going to use a different color to highlight it. That base is called a neckline. This point here where the base touches each other around the horizontal line, or the diagonal yet horizontal line, it's what we call a neckline. This is a neckline. Therefore, when do we enter? We enter trades on a head and shoulder pattern. We enter a sell when the neckline is broken. We enter the sell trade here when the neckline is broken. And where is the neckline getting to be broken? That is this point, whenever it breaks the neckline. But what you should remember is that trading tells us that whenever there's a break, there must be a retest. So the retest, which I will highlight in yellow, that is the retest, meaning that there will be a breakout to the upside, to the downside, and then another retest. Therefore, from the retest, we're flashing away, right? From the retest, we're flashing away. So typically, that is your head and shoulder pattern. You have your left shoulder, your right shoulder. And most of the time, how does it get formed? Most of the time, if your HNS is as a result of an Elliott wave. Remember yesterday I spoke about other analysis that the market movements. I told you pure price action, support and resistance, Elliott waves, and then we have harmonic patterns, which are other market formations. This one, through Elliott wave theory, you will then be able to see how your heads and shoulders gets to be formed, right? So remember, when we have a head and shoulder like this, we can have a reverse head and shoulders, which is going to be just a mirror image. The head will be on the downside, the left shoulder is still the same, but on the downside, and the right shoulder. If I were to quickly show you, just to go to, I believe it's NZD USD, if I'm not mistaken, which we're tracing at the moment, NZD USD or NZD CAD, one of the two. Yes, this is what's happening. As you can see here, we're anticipating a head and shoulder pattern, which is going to be our head, and then our shoulder there, and then another shoulder here. Then we can take to the upside, right? But remember, this is an analysis. It's a market formation within a market formation within a market formation. How do I say that? This initially, right? Initially, it was a triangle. Within the it was a triangle within a butterfly pattern, and now it's going to be a head and shoulder within a butterfly pattern, and all of them, they're confirming towards the upside, right? As you can see, your head and shoulder there. And even last week, we were on odd USD. We were on odd USD, a buy on a reverse head and shoulder pattern. As you can see here, this is the head, we have the left shoulder, we have the right shoulder, boom, we're going down. Where is our neckline? Our neckline is here. Once it gets broken, we're going up. As you can see, our neckline is there. Once it gets broken, we're going up. You can see even the analysis is still there from last week, right? The reason why I keep my analysis, I need to be able to keep the psychology to understand that whenever there are retracements like this or a retracement like that, I have a pure analysis which is going in my favor. I must keep on analyzing it, right? And then keep on supporting it. And then from there, as you can see, we have a triangle, right? This is a triangle. It was reversing, right? Our market formation right there. Look at the breakout. The breakout just tells us that we have to take profit from the base, using the base of the triangle, from the breakout, which is from this point all the way down. Where do we take profit? We take profit at this level. As you can see, even the retracement started occurring around that area, right? So it's all the requirements have been met. You'll be able to salvage the market. So I believe you guys by now, you should be having a greater understanding of heads and shoulders, and then a little bit with regards to a triangle, right? So yes, then we have a double top. A double top can be two ways. Also with the double bottom can be two ways. It can either be a cipher pattern or a bed pattern. A double top, right? A double top can be, it can be a convergence, double top convergence. In that, the base will then be your take profit. Oh yeah, I didn't explain here. How do you know when you can take profit? Is the distance between your head towards your neckline. And then you just copy it from there to where the breakout took place, which is there. And then from here all the way, that is your take profit. This is then your take profit. We'll explain it much further when we, but I can just quickly go back to my example of odd USD so that you can see it and then we can get over it, right? So that is my neckline over here. What is my ultimate take profit? From the base, right? It has to be straight. I draw it, then I just carry it from that point. I connect it there. Come on. You know, whenever I come to the side, it gets to be slow. But I believe you guys can see it. This is my ultimate take profit at that level here. At that level there. So, but it failed to hit the take profit. However, we also use a Fibonacci retracement to give us a clear direction when can we take profit and when can we not, right? So yes, going back to the lesson, your double top, you have your first top here, then meaning that your market was moving in a bullish direction. Then there was a pullback. A pullback is this one, then a continuation, and then when it gets to the previous top, which is a resistance, it gets rejected. Therefore, what you have to do is analyze if this bottom here at the mid, if it's at the 50 fib, this is equals to a bad pattern. If it's between the 50 and the 78.6, mostly the 618, but the maximum is the 78.6, it then gets to be a cipher pattern, right? So what are these? These are bullish. These are all bullish. A double top is a bullish market formation. At the 50, it's a bad pattern. At the 50 towards the 78.6 is a cipher pattern. How do you know this? You take your Fibonacci retracement tool, you draw from the bottom where it started all the way to the first top. Then you look at your first retracement. Your first fib retracement, if it gives you the 618, let me just quickly change it, the color, so that it can be visible. As you can see, we have the 618 here. This is the 618. Therefore, it's a cipher pattern. If it's around the 50 Fibonacci, it's what we call a double top convergence. A double top convergence, meaning that we're expecting the market to go bullish, of which if the market goes bullish, we're going to take profit around the first take profit. It's around the 38.2 fib level. That is the 38.2 just right here. Remember guys, I'm just mixing it up. So this is to allow you to study, and remember you have access to the Google account. The only people who don't have access to Google account is those who are not members of Yolani. So remember, I'm just showing you how it is done. Therefore, your first take profit will be the 38.2. Your second take profit will be the 618. This is the pink one. I think it's magenta, yes. This color, yes, you know, we learned, some of us, we did science, but hey, we just did science. So, so yes, from the base here, which is D point, this is X, A, B, C, D point, we buy. We buy at the D point, and then we take profit around the 38.6, the 38.2, then the 61.8, right? So all of this, once we have done this, we need to incorporate all our lessons, and then we buy, we set stop loss. Whenever we get to the 38.6, we remove the TP, or we just highlight the TP, then we move the stop loss towards entry point. Whenever we get to the 618, we move the stop loss to the 38.6. Then whenever we move to the 78.6, we move the stop loss to the 618, and then we let our trades to keep on running by themselves. They will close themselves whenever those levels get hit, right? And then remember, the reverse happens. The reverse, which is the mirror image of this, meaning you'll have a bottom, which is a double bottom. Now the bottom, the double bottom means that we sell the market. The double top means we buy the market. When do we sell? We sell at the D point, we buy at the D point, right? So you need to understand that, and you need to apply that. So we spoke about the head and shoulder, the double top and the double bottom. Now we will quickly go to the triangles, and then we'll also go to the wedges. If you guys would like, you can take the screenshots for now. You can take the screenshots. Those who are not part of us obviously won't have access to the videos, but you can take the screenshots for the lesson. If you have a question so far, you are welcome to ask. Funny. Come on, it's just today only. Yes, guys, let us continue. I would like us to talk about a triangle quickly with the falling wedge. Triangles and falling wedges, they look the same, but they're not the same. You have three types of triangle. You have the descending triangle, and then you have the ascending triangle, then you have the symmetrical triangle. Then a falling wedge is usually long, like that. Even a rising wedge is usually long, like that. You see. So triangles are all of these, the falling wedge and the rising wedge and the triangles and the pennants. These are what we call market continuation patterns. Meaning that when we're coming from a bullish market going down, and then there gets to be a retracement by the support level there, then the market starts bouncing up and down within the same price range, forming lower lows, and the lows over there, as you can see. Therefore, we're expecting the market to continue by breaking the support there, right? With a symmetrical triangle, it depends where the direction comes from. If it comes from the upside, the continuation is also, if it's coming from here, the continuation is also the same. And then if it comes from the bottom, therefore, we are also saying the continuation is the same, right? So please do understand that. Remember, I said this is market continuation. As you can see, right? And then this one is the opposite of that one, right? Market continuation. Therefore, it forms a layer of resistance there. It bounces around the same price, bouncing around the same price. And then there's a market continuation. This one with the falling wedge and a rising wedge, as you like, I'm just trying to avoid being out of time, even though obviously there's gonna be a lot of bounces within the price, right? Please do acknowledge that. Then you'll have like market continuation, same thing. So please do understand this. How do you take profit? You take profit from the base of the triangle, drawing it, the base of the triangle, from where the breakout has been. It's your take profit, also here, and also there, right? Let me just quickly show you, because we don't have enough time. I'm just going to show you. Here I did show you. As you can see, this is the base, and then where is our first take profit? I mean, where do we take profit? We take from the breakout all the way down, right? I can quickly go to other pairs which are not, which we have already. Remember that some of us, every day we're analyzing, every day we're trading, right? So as you can see, this is USD CHF. It followed my trend, it followed my analysis, is still going up. Once it breaks this level, we're going to the higher level, right? So this is my descending triangle. As you can see, the price was coming all the way up within the same resistance level, forming the base, which is the support, bouncing around the same price, forming lower lows, right? And then eventually when the breakout happened, from this arrow all the way to where the breakout took place, that's where my take profit was. And as you can see, it turned exactly at my take profit, started going from the upside. Once it gets to the base above here, should it break, I buy, and then I start analyzing, and then we're going up again, right? So please do consider that. We also have, I'm not sure about USD CAD, but okay, the USD CAD is within the box range, and then okay, cool. So yeah, okay, that's fine. I was saying it's a free analysis, but it's not. Let me check GBP USD. Okay, it's still within, and oh yeah. So yeah, if you're attending with us today or right now, sell GBP USD, you got a free signal. Right, sell GBP USD all the way to this support over here, 1.29396. Sell GBP USD, take profit is 1.29396. That is your ultimate take profit. Your first take profit can be at 1.29581. That's your first take profit, 1.29581. Your second or last take profit is 1.29396. Should it break the 1.29396, sell all the way to 1.28962. 1.28962. 1.28962. You just got a free signal. Let me see if I can issue another one. See, Euro USD. Oh, we bought Euro USD, but it's still retracing. So this one, we'll just wait for it. We'll just wait for it. USD JPY. Yeah, USD JPY is still on a sell. Remember, this is our butterfly. Still on a sell. I don't know others. Let me see gold. Gold played out very nicely. Yeah, gold, yes, there was an ascending triangle on gold. Let me go to 45 minutes. As you can see here, I mean a symmetrical triangle on gold, as you can see. And then there was a change in the direction. It broke out. For me, my estimation was that it's going to fall towards that point for market consolidation. However, as you can see, it's still falling down, meaning it can somehow turn from that resistance level, going back up and then coming down again, just consolidating around the same area before another breakout. So we will see what will happen there. We'll see what will happen there. So guys, yes, thank you for attending. There are still other lessons that we didn't cover here, which are harmonic patterns. We didn't cover harmonic patterns. We didn't cover deeply falling wedges and pennants. And but it's not a problem. We also didn't cover trade psychology, Elliott wave theory. We didn't cover the support and resistance. Tomorrow we still have time. Tomorrow we're doing BBMA. Then Friday we still have time. Thursday we still have time. And this Friday I'll be trading NFP live with everyone who can attend where I'll be at. Thank you for attending. If you need our details or if you need to talk to us, you have you have my numbers. You have my numbers. You can talk to us if you want to join us. We will give you the details and so on and so forth. Thank you for attending, guys. Good luck in trading and enjoy your evening. Thank you very much.